Now I want you to do this question. We do 5 questions of alternative investments. Okay. Now what are they asking you? Net of fees return earned by the fund in year 3. Fine. Two things I had told you specifically to take care of in any calculation question, whether management fees is calculated based on beginning of year value or end of year fund value. Number one. Number two, whether the incentive fees is calculated gross of management fees or net of management fees. Okay. Hedge fund with 98 million of initial capital charges a management fee of 2% and an incentive fees of 20%. Management fees is based on assets under management at year end. At year end. Important. And incentive fees is calculated independently. Again, important. Okay. Now they are asking me the net of fees fund return of year 3. Matlab right from year 1 I have to start. I cannot directly jump to year 3. So assets under management in year 1 beginning AUM 98 million. Ending AUM fund value is 112 million at the end of year 1. Let's calculate the management fees first. Year end value 112 into how much percent? 2%. So management fees is 2.24, 1112 and 2% on that. Incentive fees would be, there is no hurdle, right? So on the entire value addition, so 112 minus 98 into 20%. 112 minus 98 into 20%, 2.8. So total fees in year 1, 5.04. Now this fees would reduce the fund value. So 112 minus 5.04 is how much? 106.96. $106.96. Now let's do it for year 2. Year 2 beginning fund value would be ending fund value of previous year 106.96 and ending fund value at year 2 is how much? 100 million. Okay, let us give management fees of 2%. Management fees would be 2% of 100 because it is based on year end value, which is 2. And would there be any incentive fees? No, because that is value destruction. So 100 minus 2, 98. Okay, 98. Fine. Year 3 beginning fund value 98. Okay, and ending fund value 116. Okay, now management fees is 116 into 2% of that, 2.32. Incentive fees, will I give on entire value addition? No, high watermark. Previously what was the highest value of the fund? 106.96. I have written it, no? 106.96. No, now we have to consider it after fees, whatever is the revised value. So 106.96. Okay, so 106.96 over and above that into 20%. 1.808. So total 4.128. Okay, and now 116 minus 4.128. 1,111.8. Now calculate the value addition in percentage terms from 98 to 111.872. $14.15, option C. Okay, which of the following is best classified as a commodity? Okay, livestock. Why not timberland and agricultural land? No, so understand one thing now. There are natural resources. Natural resources are classified in three types: commodity, timberland, farmland. Farmland means your agricultural land. Okay. And in commodity, we have energy, base and precious metals, agricultural products. Agricultural products में further two types, crop production and animal husbandry. So then livestock will come under animal husbandry, which ultimately is agricultural product and therefore commodity. So option A. Understood this? Correct. So in case of option C, in case of in place of agricultural land, if they would have mentioned agricultural product, so A and C both would have been correct. Then they could have twisted the question like this: which of the following is least likely a commodity? So then you would have to mark option B, timberland. Okay. So least likely, most likely, these are the two words which will make or break your answer. So be very careful about it. Right? Okay. Third question. Event driven hedge fund strategies are most likely. First of all, which were the four types? I had given you a mnemonic: MADS, merger arbitrage, activist investing, distressed investing, special situations. In activist investing, if you want to be an activist investor, will you be a short party or a long party? Long. You will invest long. In distressed investing, you want to turn around the company. Will you short the shares or will you go long? Long. In special situations and all, whenever there is a spin-off and all, when there is value creation, that time also you would go long. You see, most of the cases there is long biased. It's long biased. Only in merger arbitrage, you long one security and you short another security. That time it could be neutral. But otherwise in most of the cases it is what? Long biased. So A. Why not B? Based on top-down analysis. Do you study the macroeconomic factors and all that, or you begin with studying the company specific factors? Company specific factors. So it is mostly a bottom-up analysis when it comes to event-driven strategies. And why not C? Exploiting short-term pricing discrepancies between two related securities. That is a part of relative value strategies. Relative value strategies. GMCS. G, general fixed income. M, multi-strategy. C, convertible arbitrage fixed income. S, what was S? Specific fixed income. Okay, fine. So don't underestimate theory, okay? From theory also they could test you from anywhere. Okay, fourth one. Okay, which of the following real estate investing strategies is most likely to focus on modest redevelopment or upgrades, the leasing of vacant space, and the repositioning of underlying properties to earn a higher return? Opportunistic? No, definitely not. Because it is opportunistic is the major repositioning, totally changing the face of the property. Such words are nowhere given. So between core plus and value add, you have to select one, value add, because it is modest redevelopment, upgrades, leasing of vacant space also is happening. You may give it out to some shop owners, etc. And repositioning of underlying properties. All these are characteristics of what? Value add. Fine. Okay. As we go up above the spectrum, core plus, value add, opportunistic, the risk keeps on increasing, but then the returns also keep on increasing. Leverage also keeps on increasing as we go up above the spectrum, like that. Okay. Okay. Which of the following is the most conservative approach to valuing a hedge fund's underlying positions? Now, hedge fund may have taken some long positions, may have taken some short positions. Okay. Now, you very well know the concept of bid and ask. Which one is higher of the two? Ask. Let's take a particular share, a particular stock. Bid price is 98. Ask price is, for example, 102. Okay. Now, when the hedge fund has taken a long position, to unwind that position, he'll sell it. The hedge fund will sell it. Okay. Now, I had told you bid and ask always has to be seen from counterparty's point of view. If you want to sell it, if the hedge fund wants to sell, the counterparty would buy. The counterparty would buy at bid rate. So for existing long positions, you would have to use bid rate to value them. You would have to value them at the bid rate, because you have to sell it later on. Short position means you have borrowed from someone and you have sold it. Now to cover that position, what you will have to do? You will have to buy. If you want to buy, the counterparty will sell. The counterparty will sell at what rate? Ask rate. So your existing short positions, you will have to value it at ask price. This is the most conservative approach. So using bid prices for long positions and ask prices for short positions, option A is the correct answer. Always think from that angle. Current, these are the positions. To square off these positions, at what prices would they be squared off? Think from that angle. Understood the logic? Okay. B is opposite of A, so that definitely is wrong if you logically understand this. And C, using the average of bid and ask prices for both long and short positions. Some hedge funds do use the average price of bid and ask for both long and short positions, but the question is that conservative? No, that is not conservative. Conservative means what? Showing for all possible losses, but not showing for possible gains. Okay, fine. The conservatism as a concept comes from accounting. Conservatism, show for all possible losses, don't show for possible gains. That is what this is. Clear? Okay, fine. Can I stop? By the way, I would again like to tell you that yes, I do not agree with the approach that they have taken to solve the question. This is a curriculum question, by the way. The first question which we solved. It's from the CFA Institute website, but this is how they have solved it. I mean, from high watermark has been considered as 106.96, whereas in my opinion it should have been 112, the first year's value, pre-fees. Okay, fine, but you follow the curriculum. I've told you what makes sense actually. Fine. Okay. Any other doubts? Yes. Yes. There is no high watermark in case of private equity venture capital, so that confusion won't come only.